just finished the second quarter of the year on June 30, and for all the noise, I think everyone, if you're a resident on planet Earth, you'd be aware of all the noise in the news of from trade tensions to conflicts in the Middle East that were impacting not only the world but financial markets. It turns out under the surface was actually a pretty good quarter for financial markets, and the Fortress funds all had positive returns in a couple of cases, actually hitting new all-time high levels. Most of the returns came from investments in equities, U.S., international, and emerging, especially international and emerging, continued after a strong Q1. On the U.S. side, we had a recovery after what was a weaker Q1. So Q2, actually not bad. The returns for the Fortress funds on the Barbados dollar side, our flagship Caribbean Growth Fund, was up 4.2% for the second quarter. That brings us year-to-date return to up 7.8%. The Caribbean High Interest Fund returned 0.9% for the second quarter. Year-to-date, that makes it up 2.4%. On the U.S. dollar fund side, our World Growth Fund gained 4.8% in the second quarter and is up 8.1% year-to-date 2025. And our World Fixed Income Fund was up 0.5% for the quarter and is up 2.8% so far in 2025. So yes, certainly no shortage of noisy bad news, but on the positive side, it seems like the world is working through it. We had the Fed has had to be on hold for a little while, waiting to see what the implications for inflation would be of the various tariff negotiations that are going on. But I think in terms of an outlook, if we switch now to what to expect for Q3 and beyond for the rest of the year, I'm going to guess that the noisiness coming out of the U.S. may be beginning to diminish. And I think some of the things that have scared investors in the first couple quarters of the year may have less ability to do so for the rest of the year. From where we sit as bottom-up investors, we're finding pretty good value all around the world. So in the U.S., international, and especially still in emerging markets, we're finding good, high-quality companies to still invest in. They're making money every day, and where the prospects are still quite good. So we're finding good prospects, we think, across our equity portfolios. Bonds still have pretty good yields. So we continue to be constructive and expect to see more of the same in terms of returns for the rest of the year. That's it from here.